R. Sreesankar from Prabhudas Lilladher is now joining us this morning. Sri, good morning. What do you make of the extreme sell-off what do you make of the extreme sell-off that we are seeing in global equities worldwide? You think it will continue for a while?
I think this is more severe than what we anticipated. In our preview, we had estimated the trading range for the market to be around 7,400 to 8,000, but now it's come below the 7,400 levels, clearly saying that the pressure that we are seeing from the risk awareness is increasing, which means that you're actually seeing a lot more money moving out of emerging markets into developed markets. So obviously the pressure still continues. And in my own view, I've not seen a single day where I've seen the FII numbers have been positive. So I do not think that at this stage the pressure has subsided at all.
Right. You expect the flows to be negative for a while now?
I don't think so. I think it's a case wherein there is a flight of capital which probably takes some time. If they have decided to move some part of the money, it doesn't happen in a day. Probably it will continue to happen over a period of time. Depending upon the volume, people can exit in these markets, and this is across the market. I don't think it's akin to India alone. It is across the emerging markets you are seeing this pressure. So I think we need to wait and watch till when are we going to see this FII selling getting reduced. But we also should not forget that typically what happens is there are leverage positions in the market from retail investor, retail high net worth investors. And when the market comes under pressures like this, there will be calls for maintaining the margins, and any failure of these people to maintain, or these entities to maintain the margins, will result in some of their stocks also getting liquidated by the financiers, so which will actually create a newer bottom. So I think we are going through a phase like that. So I wouldn't be a brave one right now to say that all the problems are over. That's number one. Number two, having said that, let me also look at it and say that I think the markets have entered into a range where I think I am extremely confident. See, State Bank, SBI is down to, yesterday I saw it at 172 levels, etc. Yes, there are problems in the bank, etc., but I don't think there is a huge value for the franchisees. Look at the PSU bank itself, so for a 70% plus market share, that total market cap I think is not more than 2,60,000 crore. Whereas a 6% market share bank like HDFC today is around 240,000 crore market cap. So obviously investors have given a completely thumbs down to something like the PSU banking space. The question marks, though it gets raised on the recapitalization requirements of these PSU banks, but I think right now there doesn't seem to be any value for the franchisees and value for any of those things. So some of these things have become some extremely attractive in terms of valuations.
Right. So the point that you made about valuations being attractive and FIIs may not take out all the money together, which means that there will always be that fight between the flow and valuation, and markets would be very, very volatile.
See, let me also put it, it's not the question of FIIs will not take all the money put together. If somebody has come and invested in a State Bank of India at 300, at 175 if he sells it, what he is going to get is effectively just around 60% of what he has invested. And if he starts selling also at those levels, if not a single person, if the FIIs per se, then they will push the market further down. So it need not be, if a $3 billion comes in, a $4 billion has come in, when they go it need not be even $4 billion. That valuation could be as low as $2 billion or even lower when the markets are weak. That's number one. Number two, what will also happen is emerging markets as an asset class would have seen a lower allocation of equity. Two factors. One, there would be redemptions which would have happened. Second, there will be asset allocation changes would to happen. That also entails emerging markets to see certain liquidity, certain redemptions, and I think that's what we are seeing right now. So I don't see it as unduly worried. I think India as a growth continues to have growth, where we see that some of the emerging markets like Russia and Brazil will still continue to contract even this year in 2016 calendar year.
Right. And how do you see India amongst them? So even if we grow very well, you think because the global growth is not there, the flows or the allocation may not be that good?
Let me put it up this way. If the global growth is not there, India cannot grow on its own in any differently. Because our growth also is a function of what are the growth that we will have a function of. My net exports, my domestic growth, etc. My net export is going to suffer because the global growth is not going to be there. So obviously you are going to find those numbers coming down. Let's look at even November 15. We probably had the lowest growth on exports for the last 12 months. That's around $20 billion. Now, you look further into these numbers effectively. So when the global growth slows down, we also need to come back to a reality that the economic growth in this country also is going to slow down thanks to the lower global growth. So if you have that 7.5% kind of a growth in terms of an economy in the current year, the FY16, FY17 growth is going to be probably slower than that. That's something which we need to realize and need to agree to it. That's the most important point. So obviously, when the economic growth is also going to be on the slower side, with the global growth, the allocation to equities to a great extent could be on the reversal side, which we are seeing, and that's one of the reasons why. And the problems in emerging markets, because many of these emerging markets have seen a large amount of consumption, have got fiscal imbalances, got current account deficit, and these economies will see the problems in their currency, and currencies have been weakening across, which we have been seeing across. The last 1 year, 1 year to 18 months, you look at currencies of Brazil, Russia, Turkey, Malaysia, South Africa, you name it. All these kind of currencies have seen huge amount of problems and must be down more than 30% upwards anywhere. So these kind of issues continue to be there. So when these issues are there, you obviously look in terms of a lower growth estimates and consequently a lower allocation in equities as well.
Right, that's on the global front. How have the numbers been so far? They've not been as bad as they were expected, right? At least the initial first few large companies that have declared numbers.
As far as Q3 results are concerned?
Right.
Yes, obviously, that's the point. Suddenly the global flows, global scenarios overtake the domestic situation. So what happens is, what we tend to see is, we will tend to see when the global interest starts to wane, your price earning multiples tend to contract, and you are actually seeing the price earning multiples contract. If I go back and look at the last 10-year average of 1 year forward earnings that our market has been trading, it was something like around 17.7x. So we are already at something like 16 times 1 year forward earnings, or lower than 16 times 1 year forward earnings. That's because we have already gone below the 10-year average, and that reflects the negative sentiment which is there in the marketplace, and that also tells me that the market's looking good.
Right. Markets are looking good can be a function of flows as well. But anyways, in terms of valuation, the point that you explained, you think looking at Axis Bank numbers and the underperformance that it has seen, it was factoring that the numbers would be lower and the guidance would not be that great, which is the case?
See, markets always, we always believe that markets are right and we are wrong probably. When the market was anticipating a lot more of issues coming for the banking sector per se from credit costs, because NPAs and so on and so forth. And if you read through the kind of guidance and kind of clarification given by in their press release, it says that all the issues are behind them kind of scenario, what they have need to take corrective measures, they have taken corrective measures. They have given a guidance also, if I'm not mistaken, for the credit cost that they intend to see going forward, etc., for the next quarter, etc., which is very well clear, and that's the reason why I think from a huge underperformance, it's not only Axis, it's even for ICICI Bank, it's even for all the PSU banks that you have seen the huge underperformance. So there will be, I expect to see if clear communication comes from various managements in terms of those 150 accounts which has been mentioned in the RBI, by the RBI, etc. If corrective measures have taken, provisions have been provided, and so on and so forth, probably you should see some bounce back in many of these banks as well.
Right, but would you be buyers into these names like Axis, ICICI, maybe even PSU names after the correction?
See, we continue to like ICICI Bank, we like Axis, and we would definitely look at these opportunities to add into the portfolio.
Right, as far as PSU banking names are concerned,
we have SBI as our top pick, because among PSU banks, you can paint probably most of them with the same brush. So from that point of view, we like SBI, and the kind of valuation that SBI has come to is also telling you the same thing that you mentioned about Axis, kind of huge amount of credit costs happening around, write-offs happening, etc. So we would be buyers in State Bank of India. That's right.
Right, and the reading from Axis in terms of the guidance going ahead should be positive for the entire banking sector, that probably things are not as bad as they were predicted, at least at the end of Q3?
I wouldn't like to say it as a signal for the entire banking sector, but I think for Axis Bank, they have said this is their condition. They have not spoken about the entire banking sector, if I'm not mistaken.
Right, but they have a lot of market share in the banking space. But anyways, we'll wait and watch for other numbers to come in. What do you make of the technology pack? Majority of the numbers have come in. Again, the correction was overdone versus what most of the names have delivered, at least the large cap pack.
Yeah, I don't think the performance has been disappointing at all. The performance has been well on track, so I would expect to see these stocks continuing to perform.
Right, and would you be overweight on the large cap IT space?
We are neutral on the IT space. We have been overweight on the financials and underweight on commodities like metals. That's been the stance that we have been having.
Right. Do you think that most of the commodity companies which are yet to declare numbers, that could lead to downgrade on the Nifty or the Sensex earning? Is that something to watch out for? They would come out probably after 10 days in terms of earnings.
Not at all, because if you look at the composition of Nifty, the commodities weightage is extremely low, especially on the metals. So they're going to impact your entire Nifty earnings is not going to be great. But we should not forget that in the last year, FY15, the actual earnings of Nifty was somewhere around 480 rupees. But it gets reported at 373 because there were one-offs in Tata Steel and Vedanta, that is Kane India's this one. So probably it took away a certain amount of money. I don't think in the current year you're going to see anything of that nature. So we are not unduly worried about it.
Right. As far as some of the cap goods companies are concerned, names like BHEL, L&T, very significant correction, even Adani Ports. You think infra pickup is a must for the earnings recovery that people are predicting to come in? Need
not be for an earnings recovery, because if you look at the FMCG pack, you see the volumes actually go down, but margins expand in many cases. That's thanks to the lower commodity prices that we have seen across the world. So you are actually seeing an earnings growth happening over there, despite the volumes not growing very well. So in the commodity space, again, BHEL is linked to power. There are issues. Now you look at it, the stock has also been correcting sharply, continuing to move down. So in case of an L&T kind of a story, it also implicates what the lower order book for L&T, and probably it giving you a lower visibility in terms of your Middle Eastern operations order backlogs and increasing order wins, etc., due to lower crude oil prices. So the market tends to discount too many things in a short span of time, just on these indications. If there should these start to change, the market will also start to discount these factors in a much different manner. So to my mind, when you mentioned about BHEL, I would dealing it. It's the case of a power story, and then from Larsen and Toubro, it's going to be purely from an angle of how the entire export, especially the Middle Eastern operations, profitability, order winning, order books, etc., will start to look like.
Sri, thank you so much for taking out time for us this morning.
Pleasure.
I hope to see you again quite soon.